Hi, everyone. Thanks for joining us today for our webinar, Understanding SEC Examinations of Digital Assets, Critical Insights for Private Fund Managers. I'm Suzanne Rose, Senior Advisor to the Alternative Investment Management Association, or AIMA, and I'm joined today by several experts on digital assets and compliance to talk about SEC examinations of digital asset-focused fund managers. With me today are Fiza Khan, CEO of Silver Regulatory Associates, Louis Froelich, partner at Womble Bond and Dickinson, and Lauren Abenshine, Global Head of Institutional Sales at Coinbase. I'm going to have them introduce themselves before we get started. Fiza? Oh, mute.
Thank you, Suzanne.
It
is a pleasure to be joined by you and Louis and Lauren. As Suzanne said, I'm Fiza Khan. I'm the CEO of Silver Regulatory Associates. We are a regulatory compliance consulting firm where we focus on private fund managers navigating through the SEC, CFTC, all regulator processes. And I am very excited to be here today to discuss how people who are dealing with the digital asset space can navigate what can be a very difficult situation with the SEC. So thrilled to be here. Thank you.
Thank you. Louis.
Thanks, Suzanne. And similarly, a pleasure to be here with all of you and to speak on this topic. It's a fascinating topic and very relevant to everyone on this call. Louis Froelich, I'm a partner at Womble Bond Dickinson in New York City. I'm in our investment management practice, and I largely represent investment funds and fintech clients in the crypto and outside of the crypto industry. I've spent a large portion of my career in private practice. I've also spent a good amount of my career in-house as well. I have been in part of compliance programs, processes, exams as well. So looking forward to hopefully providing some helpful insights today from a variety of angles. So thank you.
Thank you. Lauren, over to you.
Thanks, and pleasure to be here with you all today. I'm Lauren Abenshine. I look after the institutional sales and account management team at Coinbase, where I've been driving growth of this business for the last 6 years. Previously, I was in prime brokerage. Coinbase is, of course, a trusted partner for trading, financing, and custody of digital assets with a 12-plus-year track record of protecting digital assets in a compliant, safe manner at scale. We're the trusted primary custodian for 9 of the 11 US Bitcoin ETFs and 8 of the 9 ETH ETFs, and proud to have many of the top global hedge funds on our platform for many years now. Looking forward to further discussing what clients can expect from their digital asset service providers as they go through the exam process.
Well, thank you three for joining us today. This certainly is going to be interesting. And as a note to attendees, as usual, you are free to ask questions throughout this session, and we'll get to them as best as we can. So to start off, it's sort of an understatement to call regulatory oversight of the digital asset market complex. Trying to ensure all aspects of regulation and law are known and accounted for is a bit like trying to build a plane as you fly it right now. Still, I know of firms that are doing a remarkable job of it while they're under intense pressure to not only get things right, but also to forecast which way the ever-evolving regulatory path for digital assets will turn next. These private fund managers, though, aren't the only ones learning and adapting as they go. As is the case with anything new, those who oversee it also have a fair amount of learning to do. Those examiners at the SEC don't have decades of product knowledge to rely on either. So a regulatory exam involving digital assets can be a challenging undertaking for both parties. For the firm, which has expert knowledge of its business but faces regulatory ambiguity, and for the examiner, who has expert knowledge on traditional regulation but likely limited experience with digital assets. And they're tasked with applying rules that may not fit. It's not an optimal condition for an exam for sure. But today we're going to focus on, honestly, how to not get it wrong based on experiences and observations of these incredible speakers with me. We'll explore the critical compliance hurdles and risk management challenges that should be considered or addressed to put the manager on the best possible footing for an SEC exam. So let's start with you, Fiza. For as many differences as there are between digital assets and TradFi, the examination process itself is actually pretty similar. What should, say, a crypto-focused private fund manager expect, at least at a high level?
Thank you, Suzanne. And it's true, any manager that goes through the examination process really needs to be hyper-focused on the most important thing, which is educating the staff, educating the examiners who are coming in. And as Lewis will note in a minute about the actual different types of exams and the processes that take place, what we would like to discuss is a routine exam. Because you are under the jurisdiction of the SEC, you are subject to what we call routine examination. And what that means is that at any point in time, you could be examined by the staff just for purposes of understanding if you are complying with your regulatory requirements. And the process, this particular process, is not meant to be adversarial. Again, it is really meant to educate the staff on who you are as a manager, what you're doing, and your compliance program, and making sure that it actually is in line with your requirements and oftentimes with best practices in the industry. I think the other important detail to understand, especially for crypto and digital asset managers, is this is a relatively new space, especially for the examiners. It is sexy, it's in the headlines, everybody wants to talk about it. That means you are more likely to be targeted for a routine examination because this is the opportunity for the staff to learn more about this particular asset class. So what better way to do that than to use their jurisdiction to be able to come in and actually dig deep and look at what it is that you do and the asset class that you are managing. The only thing that they know right now is what you have projected and what you presented and disclosed on the Form 80V. And obviously anything that they may be out there by way of a Google search. So what you want to ensure is that your representation of the firm, your representation of your investment mandate, and your knowledge of the asset class is clear, consistent, and documented. So we'll get into the particulars around that, but I think that is the most high-level way of understanding how this process works and the mindset of the staff coming in. Lewis, do you want to follow up on those particular points and walk us through the different types of examinations a manager may face?
Yeah, absolutely. Thanks, Fiza. I think just to piggyback on what you were just saying, like it's critical to explain to the examiners as much about your firm kind of as you can at a high level. At a high level, really kind of contextualize what you're doing in an organized fashion so that they can see that you have a method going on inside of your shop, and it puts them a bit at ease. There's different types of exams. There's routine exams, there's sweeps, and that said, they all follow generally a similar sort of pattern. I mean, you'll get a letter and you'll be expected to respond to that in a very brief period of time. And kind of once that letter is received, it's kind of pencils down on kind of building out your compliance program. And kind of some of the worst things you can do is try to play any sort of catch up. And I think a lot of people, there's a lot of really brilliant practitioners on this webinar know that kind of exams are won before they start. I think when I thought about what I wanted to talk about today, 3 kind of basic ground rules came to mind that I think are important to keep in mind in this space. One is, and Fiza kind of nailed it, like this is a really cutting edge industry, and there's some really interesting topics around custody, around securities law issues, and you got to get that right or kind of mitigate being wrong as much as you can, because there's some things that are somewhat out of our control at the moment. But you also just can't forget the kind of basics. I don't want to say boring basics, but like a lot of people get their bell rung on like marketing rule infractions, books and records off channel. So, winning a crypto exam is not just having the perfect, approach to custody. It's kind of just doing a lot of the basics and having tailored policies and procedures in place. So you'll hear that from me throughout today. Just kind of a lot of the topics we're talking about are crypto-ish, but some are not. Some are just very traditional exam issues. Before I get into one other aspect of maybe more the method of the exam, I want to emphasize one other thing at the beginning, which is the importance of disclosure in this industry. There's a lot of technicalities in an exam, and there's a lot of technical parts of crypto. Is it this or is it that? Can I store it here? Can I store it there? I think people are going to get that hopefully mostly right. You might get it a little bit wrong, but it's really important to have your disclosures in really good shape, because the whole SEC regime and exam approach is a disclosure-based system, and it still is. That's how the way the Advisors Act is written. And to the extent you're kind of lacking in your disclosure of conflicts or risks, I think you can really get off the on the wrong path there. If you have good disclosures, and then you make your best moves in terms of where I keep this particular private key that holds a token, or however you want to think about it, I think there's wiggle room. And if you get a deficiency, I think it'll be largely mitigated to some extent, that you're actually running above board and fair sort of system.
Louis, we got a question in. Sorry to interrupt you, but it's relevant to what you're about to discuss on the method. We had a question: given the recent enforcement actions, should digital asset managers be, they're using the terminology self-reporting violations, but what they're really saying is, do we disclose them immediately when the exam starts? Can you say a bit about how to handle them and when it should be done? Just not necessary to answer it right now, but could you consider it as you walk through the exam process?
Sure. Yeah.
Okay.
I mean, just in terms of self-reporting, there's one type of self-reporting.
Like upfront disclosure, I think, is what they're after. Not so much the self-reporting when they're not in, but once the exam starts. Hey, we have this. Yeah.
Well, I think it's case by case. I think
I was just about to say that. Yeah, we're going to give the typical lawyer answer, which is it really does depend. And not to interrupt Louis, but I think it's really important when we get questions like this to make sure that the audience knows that the outline of advice that we're giving or the perspectives that we're giving are very high level. And it really does depend on the manager, the circumstances of the exam, the steps that you have already been taking towards the exam in terms of where you are with your compliance program. You could only be 6 months into your registration and then you're getting examined versus 6 years. So all of these things play a role. I think in that particular instance, on the it depends portion, is really, as it relates to this specific question, we at Silver would advise that you do not proactively announce a violation of your policies and procedures, and take a look at, and what Louis is going to walk us through, the document request that is received during the course of the examination. And if there's anything that addresses that particular concern, then we can work together to figure out how to appropriately craft the response and show how that particular instance has been appropriately mitigated or addressed or what have you. But Louis, I think you were going to go into the different exams and what to expect.
Yeah. And just to also comment on it, the question, if you're aware of a violation, right, that happens all the time at investment managers and asset managers. That's part of the job. You should be taking steps to remedy it, right, before the exam comes. right? I mean, so I wouldn't necessarily, start the beginning of the exam as like a confessional, right? Like
Yes.
here's all these things and we're horrible. It's like there's times in an exam and working with the personality of the examiners where you can frame things in the appropriate way, right? And if it's sensitive like that, you can work with outside counsel. You can work with your compliance consultant. That I wouldn't hide it, but there's an art to getting that across. And if you're showing that you overall have a disclosure forward regime in that you take compliance seriously at your firm, I think examiners can often get that and say, okay, yeah, you may hear from us on your exit letter, but like I don't think the world stops spinning. In terms of the methodology of exams, just kind of briefly, there's a lot of different types of folks on the call, but it starts with getting a notice of examination. There's forms of these online or in forums. You can find what some of them look like to get a sense for what they are. There'll be just a litany of questions and they'll be kind of bucketed into different types. A lot of them will be somewhat similar to the topics that we're going to get into today. You can maybe expect, depending on the type of examination, to have live interviews with your personnel. I think we might touch on that a bit later, but another big part of examination success is working with non-lawyers, non-compliance professionals to kind of prep them and get them through in the right mindset about what not to say. I know Suzanne likes to make this point about just kind of answering the question asked, right, and not bragging about your firm and not going on and on and on.
And God forbid, no humor.
Humor, it's not usually.
No, this is not a place for humor.
Work too well. And that's a lot of the meat of it is the back and forth of productions to the SEC, prepping people for examination, requests, for more time if you need it. And then you start working toward an exit and potentially working through some of the things that have been flagged. Ideally, you kind of should know where some things are headed. You won't really have certainty until it's done. And then there could be some sort of negotiation on the way out, or, knock on wood, you get a relatively clean bill of health. And, then wait another couple of years.
Well, that's very helpful. And it smacks of exactly what happens on the TradFi side. So really not a difference there, just in the guts of it, quite frankly. Look, on the TradFi side, it's long been suggested to have some preliminary documents that describe the firm, its processes and its products, aka the funds, at the ready for the SEC to review. Is there any difference if I'm focused on crypto?
I think just to give a bit more of an explanation of what you're referring to, Suzanne. So when you are going to be examined by the staff, it's suggested and it's often highly encouraged that you do what is called a day one presentation. Yep. So as Lewis noted, you will get an initial document request. That document request will inform the staff of, the initial questions that they had about you based on your Form ADV. And quite frankly, it's usually just a routine set of questions, regardless of strategy or asset class. But the day one presentation really, again, going back to the initial points that we were making, is the opportunity for you to educate the staff. Yep. And I like to make this akin to when you are pitching investors or when you have an opportunity to tell your story as a manager. What you want to do is think of it in the same vein, but without the salesy pitch. You want to present yourself as, this is who we are as a manager. This is our historical facts. This is when we were formed. This is our strategy. This is our mandate. And walk through and paint the story of what it is that you want the examiners to know about you as a manager. And again, this is an opportunity, especially if you are managing crypto and digital assets, for you to be able to represent your expertise, your knowledge, your understanding of the space, because then they know, okay, the fiduciary duty on the part of this manager is somewhat being fulfilled because they actually know what they're doing. They're not just jumping on the bandwagon. Oh, the sexy new thing right now is digital assets and crypto, so we've decided to throw that into the portfolio. Here, you're able to actually walk through and describe the manager, their expertise. And another thing is you want to be able to roadmap the compliance program for them. And as Lewis noted, there are going to be areas that you're not so great at, and then there are going to be areas where you have shined. And in that realm, you can outline those areas that you feel very strong in, that you've done particularly well in. And that actually is the roadmap for the SEC so that they can follow the crumbs and start digging into that, rather than, not to say that they won't dig into areas that you know are weak for you, but they're more apt to try and say, okay, well, this manager said that they're really good at this, so let me see if they're actually really good at that. So again, opportunities for you to present yourself in the most positive light while presenting yourself factually. And finally, I think this is also an excellent opportunity for you to highlight the critical third-party service providers that you use, because now, especially, the SEC really likes the fact that you get independent resources coming in and allowing them to oversee and to help and to serve as a guide to you being able to follow your requirements under the Advisors Act, under the securities laws. And it shows that there is yet this additional level of oversight when it comes to your regulatory requirements. So all of this is nice and neatly packaged into your day one presentation.
Yeah. All right, well, let's assume that it's a regular and not a thematic exam. If I'm a manager, I'm going to get a lot of questions to respond to, covering pretty much every area of my business. This is where things might get interesting. Custody, for example, may look, well, quite different than it does for a traditional equity long-short fund manager. How do I respond to questions if they don't quite fit, bearing in mind that although the exams aren't prepared as one size fits all, they kind of have standard questions? Lewis, you want to take that one first?
Yeah, I'll kick it off, but I also, I think Coinbase, has a lot to offer and say here. But just very briefly to kind of like set the stage, custody is a big focus. There are enforcement actions, really trying to push the envelope kind of against, I don't know if that's the right characterization, but that involve kind of crypto fund managers. There's a new safeguarding rule proposed that may rear its head again next year. And it's complex. So when I started off earlier and I said, a lot of this is traditional, I would say this is one of the areas that's much more complex and has spawned huge, brilliant companies like Coinbase to provide, salute to the technological solutions, kind of hold your, again, the private keys really is what we're talking about, right? That are, the keys to the kingdom for your digital assets. I'll get into it a bit more, but like Lauren, I'd love to hear, I think that everyone would love to hear some of your thoughts and what Coinbase is up to these days in this arena.
Sure. Yeah. This is such a complicated one. And I joined 6 years ago when we were just launching our qualified custodian under the NYDFS, which has become, quite a preferred path in terms of, establishing that qualified custody under a rigorous regulator, and demonstrating compliance with the custody rule. But we've had a chance to really work with fund managers as they've gone through these critical considerations around custody over the last 6 years. And I can say that, a few of the really challenging questions are, where do I hold my digital assets? If it's not at Coinbase, if it's not in a qualified custodian, what else do I do with them? And I think that's one of the perennial questions. And one highlight that I would give there is, it's really important to have a rigorous process for making that determination of where your assets are safest. And you can lean on your digital asset providers to give you that information, to help you understand safety procedures, things like BCP and other critical considerations around the safekeeping of assets. So too, you can lean in on the topic of making assets available in custody. And so, it is very challenging, frankly, to keep up with the proliferation of new assets that are launching. And this is a perennial topic with digital asset custodians. Doing an integration requires compliance, security, close coordination with an issuer to get information, and really rigorous reviews. And so it's a non-trivial thing, to add, especially, outside of major chains, to add to custody. Nonetheless, it is entirely reasonable for fund managers to have an active dialogue requesting that, as soon as an asset that they care about is made available in custody, that they're notified, that those preferences are voiced clearly. And I think that's a critical part of the discussion, I think, as well. And then, from the perspective of ensuring that, the processes around custody are very well outlined, being able to lean in with a custodian and really outline what the policies and procedures are that you're availing yourself of at the custodian is absolutely critical. What are the rules around where, when, and how assets can be moved? What is the number of signatories? What is the rigor around that policy engine? These are things that are really, really critical to discuss. So those are a few of the different elements. We can certainly dig in quite a bit more, as I know it's a hot topic, and maybe address some of the key questions that managers can ask of their digital asset, trading, custody, and financing partners.
But we could easily do a whole session on custody. I guess more to the point on the original question. Is there anything new? I mean, if I get a question that doesn't fit necessarily for the products that I happen to trade in, I happen to invest in, how do I go about answering it? Do I have a dialogue with the examiner? Like, what do I do? You want to take that?
I'll start, and Louis, please feel free to chime in. I think the important thing here is, again, education of the staff and helping them know that you are dealing in an asset class that does not fit into the model that they are accustomed to. Yeah. I like to equate this, and I might be showing my senior years here in terms of back in the day when private equity was relatively a novel concept to the examiners, and all of their questions were centered around trading activity and public equities and whatnot. And private equity managers were getting increasingly frustrated with these questions because, to your point, they were not addressing the particular assets that they deal with, that they are trading in, that they are investing in, not even trading in. So similarly, what's happening now is the questions that are coming through are very much aligned with public equities, securities in general. We still have the gray area of whether some of these assets that the managers are holding are even securities. So sure. How do you address that is really, we do not recommend that you say NA in response to that question and moving on. The way you respond to it is explaining in the narrative and then actually taking a moment and speaking with the examiners with respect to those questions that don't necessarily fit with the crypto or digital asset mandate, and explaining to them why this question does not fit. And you can also ask the examiners, again, this is not a routine exam, is not meant to be an adversarial process. So at Silver, we advocate for our clients to have a dialogue with the examiner and say, what exactly is it that you're trying to understand, or what are you trying to get at here? Because the way this is worded, this would not be applicable to a crypto or digital asset manager. And the number one thing around this is custody. And then it has the trickle down effect of, whether we're dealing with securities and is there a trade blotter? And, because now you have to educate about what being on a blockchain is versus, being on TradFi versus DeFi. And there's a lot of education that goes on here, but the more you are willing to educate and ask the questions of what it is they're trying to look for, the better you will proceed through the examination process.
And as well, without outing yourself as being in the midst of an exam, I personally, if I were working with Coinbase, I'd be reaching out to Lauren to try to understand how I could answer certain questions without bringing her into the exam, of course. But that's where your counterparties can really be helpful.
I would love to just highlight there, we have an RFI team that is tasked specifically with helping answer due diligence questions, both directly and for third parties. These come up in a myriad of ways, of course, and we have an extremely rigorous set of information that can be made available on both to topics specific to our services, but also thought leadership and topics that we've published that can help to explain things like, this is a T plus instant asset class. There is no clearinghouse. These kinds of topics that are really driving some of the custodial considerations and settlement issues are things that digital asset providers, certainly Coinbase, have spent a lot of time grappling with and can provide really detailed information. And I think that's something that you should expect of your partners.
Absolutely. No, and it's
just
very,
to piggyback off of what both Suzanne, you were saying, and Lauren, the examination process is a wonderful opportunity for you to now rely on the collaboration of your service providers. Mm-hmm. So oftentimes when we are brought into the exam process, we'll reach out to the Laurens and to the Lewises of our clients, to outside counsel, to our qualified custodians, and say, okay, here's where we are, and we need you to work with us to get to a place where we're all comfortable in what we're representing the manager is doing by way of this particular item or as a crypto or digital asset manager. And do we have the documentation to support it? So that's when we go to Coinbase. That's when we go to Lewis with respect to the fund docs. Like, how do we get this to be a consistent picture? It is a collaborative process. We are not siloed as your service providers when it comes to the examination process.
Well, before we escape the clutches of custody, which is, again, we could do a whole session on this. We did have a question come in, and I just want to bring it up for that context as well. We were asked, in a scale of grays, how safe would you believe doing self-custody of digital assets is in terms of the custody for RIAs? The thing I want to point out here, just to be brief on this, is that TradFi also has the ability to self-custody. You have the ability to self-custody. There sometimes are better reasons than others for doing it. In many cases, in the beginning, in the earlier days of digital assets, it was a dearth of providers. But that being said, however you custody, it has to comply with the custody rule. So whether you're self-custodying or you're using a qualified custodian, as long as it complies with all of the, and in some cases, myriad requirements, it's okay. What's not okay is deviating from those two options. Would any of you have something to add about self-custody without diving too deep?
I'll try to keep it,
Sure.
keep it brief on self-custody of digital assets, but I can do it.
Please.
Yeah, it's tough because like a lot of my, friends and colleagues that work in the industry, right? Like the reality of their day-to-day is working with founders and traders and investors that are they're really venture capital trained people in that industry that want to make cutting edge investments, right? And their careers and their incentives are kind of aligned toward doing those deals. And as Lauren said, I think Coinbase is as good as it gets on support of these projects, but it doesn't always tie up. And you don't have the option, right, to list on Coinbase or to invest, right, with something supported by Coinbase. So I know firms out there are self-custodying in certain circumstances, right, or working with a partner. And I've noticed a couple, some of things that they do, which I'm happy to share. I just think you have to demonstrate to the SEC that you're extremely aware of the risks of self-custody, that it's not a permanent thing as much as you can. You also have to be prepared to defend it a bit from a legal perspective. There's the argument that the particular tokens are not securities, and there's been a lot of recent cases coming down. It's still kind of being debated, but a lot of the recent cases the last few months are saying, the tokens in and of themselves are not securities, right? Like they're just these digital sort of things by and large, and the way they're offered and sold can make them or not make them a security. So you can approach, Suzanne, kind of the self-custody issue and avoiding it by, I think, trying to also replicate what it looks like to be in a QC. So showing that like it's audited, right? We have extreme.
That's usually a big one. Yes.
Like it's not in a QC, but like it really looks like it. And we're doing all these amazing things and fulfilling our fiduciary duties to our investors. And look, like this is the reality of our industry right now, but like we are disclosing it, we are auditing it, we have kind of robust cybersecurity around it, and we hope it's temporary. And we've asked the project to work with Coinbase, and we've required it contractually. I mean, there's a lot of things you can do to kind of mitigate this, but also keep pushing your business forward.
I'd also just add quickly as an insight, there has been great strides in the industry in terms of safe self-custody models. And, a lot of that has come in the form of, wallets that are attached to custodians. Coinbase is proud of ours, but we have other great competitors in the space that allow you to operate under a rigorous policy engine that is adjacent to a qualified custodian and seamlessly transition in. There are other solutions that really provide strong assurances around custody of the shards but still enable that self-custodial solution by MPC. So I think if folks are relying on something that was done several years ago, it might be healthy to revisit what's out there and to continue to demonstrate the rigor around safety. Auditability is a great highlight as more of these solutions do come under SOC reporting and relevance.
Absolutely.
I would just like to add in piggybacking off of both what Louis and Lauren have said, and even Suzanne, what you had mentioned, that self-custodying is allowed. So what we advise our crypto and digital asset managers to do as it relates to the analysis around custody of their crypto or digital assets is first to take a look at the custody rule itself, and then, okay, let's treat this asset, regardless of what we think it to be by way of a security or not, regardless if it meets the Howey test or not in your analysis, let's treat it like a security. Now, does a Coinbase or similar institution that is a qualified custodian of these assets offer a place to be able to custody these assets? If yes, then you should hold those assets at the qualified custodian. But sometimes that's not possible, right? Because it is a particular asset that cannot be held on these particular at these particular institutions. So then we look to the custody rule and see, okay, can it qualify as a private security? And there are 4 prongs to that. If you are able to meet those 4 prongs, then again, you are in line with the custody rule and you are allowed to self-custody. And okay, so what does that look like? If you are unable to meet those 4 prongs, you don't have a place to put your asset with a qualified custodian. Where we have found a lot of success is the documentation of this analysis and showing that you were mindful of, okay, we did try to house this at a qualified custodian, that didn't work. We went through the prongs of a private security, that didn't work. So now we are going to self-custody. We are going to try and do everything that we can to meet, as Louis, you remarked, that this looks like like being held at a qualified custodian with all of the requisite security measures, all of the BCP requirements around this. And oftentimes, crypto and digital asset traders and managers are even better at self-custodying than had they been with, not with Coinbase, but with another service provider, right? Who was not familiar with crypto or digital assets, who's just kind of feeling their way around. So the idea here is to be able to document and represent that, hey, SEC, we actually went through each of these steps as it relates to the analysis of the custody rule. This is where we landed in the actual custodying of the assets. And exactly to what Louis and Lauren said, now look at us complying with all the other aspects of the rule. We audit our financials, we disclose all of the valuations, et cetera, as it relates to these asset classes. And we have had quite a bit of success with this approach. I do agree with Lauren in saying, if this is an approach that you've taken in the past and you've just kind of stuck with it, you should revisit it ideally during the course of your annual review, which you're required to do as a registered investment advisor, and actually see if this still holds. Because it could be that now Coinbase can house this security for you and act as your qualified custodian, or it's actually deemed a security now. So let's figure out what that means. You should be revisiting these protocols on an annual basis.
Absolutely. Well, look, we've got about 15 minutes left and a lot to try to get through here. So I'm going to do my best to navigate more quickly through this. Highlights wise, Lauren, just if you don't mind quickly, your role obviously gives you a much better view into counterparty relationships. Any advice on maybe what somebody might want to highlight or focus on during an exam when I'm explaining my processes, my trading, my settlement, my custody, like anything, any words of wisdom you've got on that?
Yeah, I'll try to keep it light here because as we could do a whole couple hours on this. I think we've touched on a lot of custody, but I'll just recap a couple key things. Making sure that you're able to articulate asset safekeeping, specifically bankruptcy remoteness. What are the policies? What is the custodian signing up to? What do your docs say? What are their practices? This is a really important topic. Obviously regulation, regulatory stance. Financial strength, so ability to meet client obligations, ability to continue to invest in safekeeping, which is in a fast-moving industry a really critical consideration. Staying ahead on security, articulating method of storage. I think people have gotten a lot more comfortable with a lot of the different ways that custodians are keeping and safekeeping assets, but that also evolves. And it's important to be able to, articulate, and your custodial partner should be able to share with you disclosures on controls around the private key and wallet generation, physical and virtual security, BCP, incident response. These are all really important areas that you can review documentation on and demonstrate due diligence. And then I think we've just touched on it, but advanced capabilities. Not so long ago, staking was an advanced capability, right? With the launch of ETH staking, some folks were caught off guard or weren't able to facilitate that, and I think that's going to continue. Imagine a world where DeFi becomes more and more important, in this rates environment, and with advancements in things like on-chain verification, having a safe route to go on-chain matters, and so. Understanding from your custodial partner, what does that look like? What are the controls? Are you positioned to be able to provide those advancements for me is important. And then I think very much the basics like insurance, SOC reporting, audit, like these are, everybody gets these inside and out. One that I'd highlight to think about, and I mentioned this earlier, but just that policy engine. What are the controls that I have? Have I updated that? Do I have the right users? On the account, if I'm using API keys, what are the controls around that? These sort of access points become really important. And then to just switch a little bit to trading quickly. This is a complicated one, and I think we've touched on it a couple times, but the challenge in digital asset trading is that there is not a central clearinghouse. You are in many cases settling onto non-qualified custodians, and exchanges. And so thinking about first off the security of your trading venue is important. Thinking about the counterparty risk that you're entering into. Do you understand principal versus agency, positioning for your partners? Are you assuming credit risk without realizing it, or are you appropriately taking the right approach there? I think these are all key. And Louis, you talked a little bit about the upcoming safeguarding rule, but the increasing focus on being able to have assets in a qualified custodian through the life cycle of a trade is ever more critical. Coinbase is now enabling that through an offering that allows settling into a qualified custodian. But this is really a vital area as managers think about how long are my assets spending outside of a qualified custodian when I'm trading. So being able to articulate clearly what the operational aspects are to get assets back into custody are all really key. So I could go on, but those are just it's a bit of a laundry list of things to think through.
No, those are terrific. And actually, one very insightful comment made by an attendee brings back up the reminder that be very careful when you are explaining your processes. No acronym soup. Be careful for short names. They may be common to you, but not to others. And while you don't want to go too parochial in explaining something, you do want to take care to ensure that when you're explaining one of the many processes Lauren just mentioned, that you're doing it in a way that somebody without the same experience will understand. I want to shift gears quickly to from the operational side, because we know that the SEC is very focused on things like marketing activity, courtesy of the not so new marketing rule. But for all the differences between digital assets and TradFi, their core marketing concerns are probably the same. Being able to substantiate claims, showing performance in a manner that's consistent with the rules, social media activity, and so forth. Louis and Fizza, is there anything in particular that digital assets focused firms should be focused on besides obviously everything?
I can kick it off. I think it's similar to kind of TradFi, if you will. I think that you have to go to greater care, like we've talked about this entire webinar in explaining being careful about your claims, because there's a risk that they could be misunderstood by people who don't understand it as well. The marketing rule, I think, still think of more of a traditional kind of TradFi concept, you gotta, I mean, we don't have to spend too much time on this, but it's equally as important, as some of these other things we're talking about, being cognizant of what you're saying and being aware of the more prescriptive nature of the new marketing rule from a couple of years ago. It goes into pretty intense detail on how you can advertise your performance. And one thing that's caught my eye recently, it's actually, I think, subtly very relevant to crypto, which is kind of benchmarking in model performance and things like that when you're advertising your funds, because the returns in crypto can be wild, right? And you can give the impression that you're the best manager since the Stone Age. And the SEC is really going to kick the tires on the indices that you're comparing to, the time periods, the construction of the indices, and really look very deeply that if you're giving like the right impression to your audience, right, or you're overselling it. The way I like to think about this one, and then I'll turn it over to Fizza, is like, performance should largely can kind of largely be used often in terms of reporting, and think more that you're kind of reporting what's happened. And if you start to take more of a sales aspect to performance reporting, you can start to kind of pull too many levers and press too many buttons to make it look a little better than it is. And it's just really something that I think is susceptible to the crypto industry, and recent actions from the SEC more in TradFi says that they're looking very closely at performance claims. So I think that's something to watch out for.
Yeah.
Yes, I think marketing is low-hanging fruit for the SEC, regardless of asset class. But I think crypto managers, digital asset managers in particular, have to be quite careful, especially for the points that Lewis made. The way that you present the material is one where you need to be explicit in how you get there, in terms of, even to your earlier point, Suzanne, you don't want to have the alphabet soup, etc. Even though your marketing materials technically are being presented to a knowledgeable, sophisticated investor base, you still have to keep in mind that ultimately these will be reviewed by the SEC for purposes of compliance with the marketing rule. And to the extent that you can be as transparent and as explicit about the claims that you're making, whether they're in the narrative or by way of performance, the better, because then there's less ambiguity, the less the SEC has something to dig into to create an issue as it relates to the marketing rule. I think for crypto and for digital asset managers, it is that much more difficult, because it is, again, fitting a square peg into a round hole. But for purposes of marketing, if you can be very transparent, clear in what you're trying to convey in your messaging, this goes across all asset classes, I think you will fare well. And as we've been saying about all these topics, this in and of itself could be a webinar in terms of how you should approach marketing materials. But again, keep it as factual and as transparent as you possibly can, with obviously keeping your business purpose in mind.
Sure. Well, we've got about 6 minutes left on the clock here, and there's still plenty to cover, but anything in particular cyber-wise that I should be pointing out that might differ from a TradFi firm? Any of you? Just putting your exam hat on for a moment? Or just pretty much just being thorough about your counterparties and yourself?
Yeah.
I'm happy to talk about maybe like the new Reg SP amendments briefly, but like just to put on people's radars. But Lauren, I don't know if you had any thoughts from a cyber perspective or some of the best practices that you see.
Yeah, and I, just recapping a little bit some of that color from earlier. I think really focusing in on having the right, policies and procedures for protecting your own systems, This is absolutely critical in that, and it takes on a greater import in digital assets when you have, these are bearer assets, right? So that managing your own intrusion and having that robust set of policies is really critical. And also just ensuring that you are documenting what's available from your partners in terms of a policy engine and the controls that are in place there, I think are really, really key.
Absolutely. Well, look.
Go ahead, Suzanne.
No. I was actually going to go to something that I think each of you have a view on this from our prior discussions. A bigger picture issue. Well, attitude. And how attitude can greatly impact an exam. So above all of this detail, there's one overarching theme. Your attitude can dictate how your exam turns out. With all due respect to the SEC, the fund manager is undoubtedly the expert where digital assets are concerned, but the examiner is there to validate compliance with regulatory requirements, regardless of whether they fit well or not. Do you all have any comments you'd like to make about attitude? Who's first?
Louis, go ahead. I'm happy to share.
Yeah, it's a balance. Obviously, unemotional, cordial, polite, but you also have to stand your ground. And I think you'll see in case law, in exams, the SEC really try to push toward their own conclusions, and sometimes there's legal conclusions in there that you can challenge. And like I said, really at the beginning of this, it's a disclosure-based sort of regime, and there's a lot you can do if you disclose things properly. So I think when I think of attitude, I think of, on one hand, obviously being helpful and explanatory and taking the time, but being assertive and holding your ground and working with your service providers to defend the decisions you've made. Right. And I think it's really important to kind of, for the examiner to feel some resistance at some point, not friction so much, but they seem to be running a good program and they're confident in it. So I think it's really important to kind of stand your ground when the time comes.
Yeah.
Just to further elaborate that point, I think that the biggest thing here is deference. And showing that you do have deference towards the staff, but having that right balance of being able to educate and let them know that I do know as a manager what I'm doing, and this is what we are doing. And you can really go a long way by being patient and explaining things in a way that, even if you have to explain it 100 times, especially when it comes to something like crypto and digital assets, you will have to explain things 100 times before it actually resonates with the staff member, and being patient with that process. And I think this is just a good example overall of why it's important to have some form of exam prep, whether it's through your counsel, through Lauren and your representatives at Coinbase, through us at Silver Regulatory. Having that level of interview prep, exam support, whatever it is, because we've been through this, we're emotionally detached. We can get you to the place where you need to be, but just making sure that you actually understand what is being asked and responding accordingly. And it's okay to ask the follow-up questions and be deferential about it. You would rather do that than to disclose something that you really didn't mean to discuss with the staff and have them go down a different avenue. So yes, attitude is 100% important to all managers, and patience.
Absolutely. Well, look, with we're almost out of time here, but I want to just ask if you have any final words you'd like to leave with. And Lauren, I'll ask you to lead.
Absolutely. Just appreciate having the opportunity to address this audience today, and really invite folks to not be shy, keep your expectations high of your digital asset providers. And I think it's very much reasonable to look to Coinbase and your other providers to really help you through this process, furnish information, work to solve product gaps that are keeping you from really complying in the ways that you want to, and keep that open dialogue.
Thank you. Lewis.
Stay tuned for more fireworks in the next 2 months. Like, there's a lot coming up. There's so much that you're in control of. And that's what I emphasized earlier about, like, there's some things that are not that complicated and there's a lot of noise, and like, just kind of do your job and focus on this and read up, and like, that stuff's in your control. There's a lot of the stuff that's outside of your control. And like, there's only so much you can do about that. And as we've emphasized, like, showing your thinking, having it documented really goes a long way toward, a reasonable outcome on an exam.
Absolutely. This is a final word for you.
Final word is education. As crypto and digital asset managers, you are the experts with experience in this very new asset class to the staff, and let them know that. Show them what it is that you know, how you know it, and working with your service providers to help you get to the right place. And I think you'll be successful in the examination process.
Fantastic. Well, look, I really appreciate all of you sharing your expertise today, and I'm sure attendees do too. And we do have a couple of straggler questions. I'll try to get them answered offline, and certainly thereafter, if you've attended and you think of something afterwards, hit us up at AIMA. A replay of this session will be available in the coming days. And thank you all for your time today, both the attendees and you three fabulous people. Thank you.